Last week updated the toll of record high closing prices. The benchmark stock indexes soared on a Friday thanks to upbeat corporate earnings of high-tech giants. This cushioned the blow from the strong nonfarm payrolls. The new trading week is opening with a different sentiment. The economic calendar is on investors' radars this week. Currently, investors are revising their bets on the Fed's monetary easing. New macroeconomic data will hardly provide the stock indexes with the same support as on a Friday. Investors are likely to take a more sensible approach to the Fed's agenda. You are watching a review of American markets with me, Ekaterina Stikhina. The Nasdaq showed the best performance on Friday, closing 1.7% higher. The Dow Jones logged a modest gain of 0.35%. The S&P500 grew by 1.07% to close the session at a new historic record of 4,958 points. Futures on the US stock indexes traded 0.16 and 0.24% down. In the New York pre-market, the S&P 500 is expected to trade in the intraday corridor between 4,909 and 4,980 points. If the index goes beyond these borders, the next bearish target will be at 4,891 and the next bullish target will be at $4,500. Encouraging US economic data has again caused doubt on the prospects for a rate cut this year. The non-farm payrolls released on Friday surpassed the consensus almost twice. The public and private sector added 353,000 jobs in January. Besides, wage growth unexpectedly accelerated. Market expectations for a rate cut dimmed in the light of the official employment data. Fed funds futures reflect a 70% chance the central bank will cut the official funds rate at the meeting on May 1st, down from more than 90% on Thursday. Despite the gloomy picture for the stock market, optimistic reports from high-tech giants added bright colors to the grey background. The major stock indexes received a boost, in particular from Meta and Amazon. On a Monday, futures for the US stock indexes fell under pressure from rising treasury yields. Both the 2-year and the 10-year yields updated their one-month highs and continued to rise intraday. The rise in optimism and yields was encouraged by Federal Reserve Chairman Jerome Powell, who said in an interview on a Sunday that he wants to wait to be a little more confident that inflation is sliding steadily before cutting interest rates. In addition to caution, Powell expressed confidence that interest rates will begin to decline this year, but shifted the focus from spring to summer. In the interview with the Fed chairman was recorded before the release of Friday's non-farm payrolls. Today, the market will definitely want to get more information from the Fed policymakers who have the full picture. During the day, speeches are scheduled from Chicago Fed President Austin Goolsbee and Atlanta Fed Chairman Raphael Bostic. Many analysts believe that strong growth is a positive for stocks, especially if it's accompanied by better-than-expected corporate earnings. This opinion will undergo its first test today. The highly sensitive stock market can react quite abruptly to statements by Fed policymakers. Trader sentiment may also be affected by the ISM non-manufacturing PMI for January. Unlike the confusion in the stock market, market sentiment on forex is in favor of the US dollar. Its index is enjoying its advantage at the beginning of the week. It's trading in confidence at about 104.38. The US dollar index opened on Monday 0.4% up. It's set to extend its strength later in the week. The intraday corridor for the instrument is seen between 103.90 and 104.50. The index rallied to the highest level since November 17. The catalyst for the greenback's rally is clear. Jerome Powell's caution on the back of robust employment growth. Fed funds futures now indicate about 120 basis points of a monetary easing this year, down from about 150 basis points. The probability of a rate cut in March is approaching 16%. Expectations for a rate cut in May are also cooling. At the same time, we should not forget that despite solid fundamentals, the US dollar is vulnerable to the pressure. And today, the market is alert to comments from the Fed policymakers. The firm US dollar squeezed even modest optimism from the Canadian dollar, which pulled back from the highs of the last week. The USD CAD pair opened the New York session at 1.3450, having jumped by 0.31%. The instrument is expected to trade in the intraday corridor between 1.3468 and 1.3520. The loonie is going through troubled times, neglecting domestic macroeconomic data and giving in to the strong US dollar. Another blow comes from weak oil prices. If the USD CAD pair passes 1.3520, the price will rebound to the lows of December. Oil prices are not providing support today. They retreated after a sharp rise on news of new US airstrikes against the Iranian groups in Iraq, Syria, and Yemen. Both benchmark rates retraced down by 0.05 and 0.3% today. The crypto market is opening a new week mixed amid a turbulent information background. Bitcoin is trading higher before the opening bell. The flagship crypto still finds support from avid interest in the new spot Bitcoin ETFs. According to the fresh data, ETFs launched by BlackRock and Fidelity taken the lead in the market, according to the inflow of $715 million in the last 6 days. The growing interest in the first cryptocurrency from institutional investors cushions the impact of negative factors on Bitcoin's price, and the asset, although not showing sharp growth, is trading quite confidently. At the time of preparing material for this video, Bitcoin was trading at $43,202, 1% up. All in all, the crypto remains in the flat market. The baseline scenario suggests the intraday range between $42,500 and $43,200. Support levels are seen at $41,900 and $40,000. Resistance levels are found at $43,700 and $44,300. Our review of American markets is over. Subscribe to InstaForex TV channel, and we will keep you updated on a daily market developments. Financial markets offer ample trading opportunities. See you online tomorrow.